Now, this is the SPX. We trade options on the SPX as well as the micro version of the SPX, which is the XSP. We also trade the E-mini S&P futures, options on the E-mini S&P futures. Basically the same thing. However, depending on where you are in the futures cycle, their prices may differ by a bit, but their activity, their tick-by-tick movement is exactly the same. The big difference is that the futures, they go around the clock, where the SPX, although it does go around the clock, most retail traders can only trade it between market hours. So the other big difference is that the SPX has no volume, and that's because the SPX isn't a real thing. It's a calculated index. Therefore, it can't be traded, and therefore it has no volume. So in order to provide some idea of where support and resistance are, we always use the futures because it does have volume. It is a real thing. It has a futures contract that is actually traded. So all of our volume profile is actually done through E-mini S&P. All right, so here's the E-mini S&P, and this is a very close-up view. I'm going to take a look at it over a long period of time. You can see all these lines that I've drawn here. Those are the things that we're going to get to. But here's the market over a long period of time. You can see where the market is right now, right here. Those are the areas that we're interested in, these different levels that we're interested in. And that's what we're going to discover. Before we go and recreate it on our own, what I want to show you is what the volume profile looks like. Now, what I'm going to do is I'm going to back it off a little bit. I have it going all the way across the chart. The reason why I have it going all the way across the chart is that I want to accentuate the nodes and then the valleys here so that I can see where the change in volume is. Remember, I said the change in volume are the areas where you see support and resistance. Those are like the scars in the market, and they actually provide areas or very telling areas where support and resistance are when you're zoomed in. So the first thing I'll do is, normally when you see volume profile, you'll probably see it looking something like this, maybe at 35%. That's fine. You can still see where the nodes are. You just can't see them quite as well. So you can see that we've really marked this thing up. I marked this up several weeks ago when price was way over here. So the interesting thing is that even though I've marked this up several weeks ago, the lines, they tend to persist because the profiles don't change that much. They change over time. Every time price goes by it, volume is being added to the profile. But you'll notice that this profile is giving me the volume picture over this entire range of prices, all the way back to 2021. So I'm literally looking at 2 years of volume in creating this profile. And then I'm using these lines to mark up or to indicate where that profile has made abrupt changes from very high volume to very low volume. And those places are at the edges of those nodes. They're also at the very deepest crevices of the nodes. And that's what all these lines are indicating. Now, just to show you how impactful that is, I'm going to remove this box. This box is just making it easy for us to see where the node is, but I'm going to just remove it. So I use different color lines to indicate different things. Like the purple lines I use to show the boundaries of a profile, and the peach lines I use to show how that profile has sort of expanded, all right? And then the yellow lines are showing the very deepest crevices of these, what I call volume wells, or these low volume nodes. So we have high volume nodes and then low volume nodes, which are kind of like the opposite of the high volume nodes. And the yellow lines are showing the very deepest crevices of the low volume nodes. And then the purple lines and peach lines are showing you the features of the high volume nodes. All of those are very significant in terms of how price is moving across them and how price tends to behave. Now, as a general rule, high volume nodes represent lots of volume or lots of liquidity. And so price tends to move more sluggishly because it's going through areas that have a higher density of volume. It would be the same thing if you were like moving through mud as opposed to moving through air. When you have mud, you have a higher density. You can't move through it very quickly. It's air, it's light, and there's nothing providing any resistance. You can move through it very quickly. So think of the low volume nodes as being very airy and the high volume nodes being very muddy. And you can see that in terms of the way price moves. Price tends to move in big, long bars through the low volume nodes and through shorter bars in the high volume nodes, as an illustration. So if I were to zoom in on this and go from a day view, maybe down to a 15-minute view, we would start seeing that these lines that I've drawn seem to be very impactful about where price is going. So you can see right here, price was bouncing off of this, trying to break through into a low volume area, but it couldn't. It tried, but it just would bounce back. Then it would come back down here, and this is another area showing the edge of a value node, finding resistance or support there. And over here, you can see an LVL, or a low value level, where it finds support there. And then you can see how the price tends to ride along this edge. And also here. Now, keep in mind, I couldn't see this level of detail when I drew these lines. I was looking at a 2-year chart drawing these lines. So all of this price action was all represented in a single bar. I can't see it. If you look at price action from this point all the way to this point, that's a day bar. I can't see that whole thing. It's just looks like a bar. It doesn't show me that price is bouncing here and here. Here. So as you can see, even though these lines represent features in the profile that are made from a very high level view, taking in literally years of data, the present day price is respecting them very accurately. Now, they're not perfectly accurate because I'm doing it at such a high level, it's hard to see. So these lines might in fact be off by a point or two here or there, or it could be that there is a little bit of leeway in the market. Of course, this is true, that there's a little bit of leeway in the market, and the institutions that are out there that are protecting these levels, they're not protecting exact levels. They have ranges that they're working with. For the most part, they come in pretty darn close, providing a very, very clear area where the market is providing support and resistance.